Hello traders, good day and good day to everyone. Today I'm going to be showing you guys the concept of how I personally trade my liquidity strategy. So this strategy is based on equal highs and equal lows. Most of the time equal lows does not occur in the market. So we must have a trend direction before we spot out our liquidity. As you can see in this case, this is a downtrend. So this market is time to sell. So this is a downtrend. We need to identify two things. We need to identify a break of structure and a liquidity sweep to continue to the direction of the trend. Now, how do we spot it? We need to identify a break of structure. After a break of structure, forming an equal highs. Now, these equal highs might actually swept before we get this push downward, but in some cases the market form an equal highs, making it a liquidity trap for the market to trade back to and take out this our inducement right here. Inducement is also a liquidity. Take out this our inducement right here before the massive push. And in a scenario like this, we also have another block sitting right here, but most of the case the other block does not get tapped, does not get triggered. If you are put in a position here like this on this place, then you stop below above the high, then you take profits at the next extreme end. Most of the case, that's why you wonder why my order does not get filled, because the market has already taken out this liquidity right here, and it mostly take out this liquidity with a wick, and then the market push to the downside. But most of the cases, it trigger your order before the massive push. So I personally, I find it difficult to trade other blocks. So I mostly just let my market sweep these equal highs, and then I go to the lower time frame and look for confirmation around this swept of this liquidity. Then I enter and I ride the trend down to the other side. So this is the case of when we are selling the market, we need to wait for a break of structure to the downside. Then the market has to go and sweep these highs that break the structure. In a moment whereby you see the market forming an equal highs and there's no sweep occurred yet, something like this, but we still have to wait for the market to come back, actually take out this high, because this is a trap. This is a trap most people fall in, because most people might want to get into the other block that is in place. This high here, there will be another block to trade from this high here. Most people want to enter from this other block and ride the trade down, but in some cases the market is all just building a liquidity around here. So this liquidity that must be swept out before you ride the trend to the opposite direction. So in most cases you see this, backtest this and let me know what you find out. This is a case for a sell, why a case whereby we are buying. So this is a case whereby we are buying, we are still looking for the same thing. So this has to be a break of structure to the upper side. So which is we are buying, we have to see a break of structure to the upper side. Then the low that break the structure needs to be swept. Like I explained in the previous one, it can form an equal low. Then the safe traders, if it's buying, they actually come down to sweep this low before the massive push occur. So we have to wait for a break of structure, the sweep of liquidity to the downside. Most people enter from the other block that is right here. So in most cases, this actually plays out in most cases whereby the block that breaks structure, then you wait for a pullback into the other block and then you buy from there. That's why you see that the market actually reacts from this other block and started buying, and in most cases come down to hit your stop loss before the massive move occur, and that is very frustrating. I find it difficult trading this type of pattern, and I had to do my research and backtest and see that most of the case the other block has to be swept, because people buying from this other block, their stop loss is actually below the other block. So the market is tend to sweep and take them out before the massive push occur. I will show you a previous chart of USDJPY. This is a previous chart of the USDJPY. So we are going to replay and see how the strategy perform. So this is a supply zone of the upper side, and this is a liquidity on the upper side. So if we identify this trend correctly, this trend is a downtrend. It's actually shifting into a buy. This is our low, as you can see. Over here, we had a sweep of this low with a wick, and then the wick price started reversing, changing character over here. So once you see something like this is what I'm talking about. This is the sweep of liquidity. We do not want to see a body close of a wick, of a candle. We do not want to see a body close, something like this. We do not want to see a body close. We want to see a wick that swept the liquidity of the previous low. So this signifies a reversal of the markets, and you also have to wait for a change of character. So this change of character over here, most people likely want to buy from this other block right here. As you can see, most of the case the other block was not mitigated. You see what I'm talking about? This case now, the other block was not mitigated. You would have missed this entry right here, waiting for your order to be tapped. And this is my liquidity sweep right here. So this sweep, you can see that what happened here also repeat itself here, right? You can see this is our sweep, and after the sweep I go to the lower time frame. This is the daily because I'm doing a back test. So I go to the lower time frame to look for an entry, or as well, this is the daily. We can just show an example whereby we enter from after the decision candle, the bullish candle show the strength of the market. We can enter here. There was stop below. We aim for 1 to 3. That is what I recommend everybody should aim for, and that is consistent. That is how you can build your consistency in the market. 1 to 3 and 1 to 2 is very okay. You don't have to go for a massive push going from 1 to 5, 1 to 7, 1 to 10, those crazy numbers. 1 to 2 is fine, 1 to 3 is fine. It's how you build consistency in the market. And if you can look, in most cases our order was fulfilled. You get it now. So people buying out this demands order block right here, they will miss this move right here because they're actually waiting for their orders to be filled. Likewise, the order was not filled. The market only tends to take liquidity before the movement. So this order block here will likely be filled later, but in these cases it wasn't. So yeah, this is how we identify a sweep of liquidity. This is the buying structure of the market. So this is also a present chart. We have a sweep of liquidity on the upper side. We are expecting the market to buy, feeling this imbalance right here. If you are selling from this supply zone, this may actually fail because, as we can see, we are having a reversal over here, and the market also pushed to the downside, taking some liquidity around those levels at the previous side, and then the market is trying to shift to the upper side. You can see the market shift from this place, also this place. We are having a shift because this is the main structure. This is the main shift of the market. So since we are having a bullish structure here, so we should be looking at buying. Where are we buying from? So we need to identify the low of the liquidity. The market might come to sweep this low, and we also have another low right here, and we also have another low right here. So we are expecting this liquidity to be taken out before anything else. So we also have another low right here. So these are our liquidity trap in which we are expecting the market to come and sweep before a move to the upper side. So let us play and see what happens. Just extending it so we can see how the market tends to play out. Now this market is range. Okay, we had a sweep of the first liquidity, but we broke the structure with a body close candle. So this is not valid. The market will still sell in this case. So we need to wait for another sweep of liquidity with a weak. Permit me to extend this. Alright, so this is the structure. You can see that the market is still selling, it's not trying to buy yet. We need to wait for a proper sweep of liquidity. And this is a daily time frame. This is going to take time to play out if you were trading this on a daily time frame. But the market is fractal. We can actually take all this trade in the 1 hour, 15 minutes, 5 minutes, and even 1 minute. I normally execute my trade in the 1 minute and 5 minutes. I use the 1 hour to identify the sweep. Then I go to the 5 minutes and the 1 minute to execute. And you can see we need to wait for either this sweep or this sweep with a wick and not a body close candle. So we are still waiting. Okay, we have a push to the upper side, trying to change the character of the market. And alright, you can see, let me explain something to you. Alright, you can see the market is trying to shift and change character over here. Most people will identify this as a change of character, right? Then they will want to buy from this other block right here, and you can see the other block has been fulfilled. So people buying from this other block right here, they are stopped, let's just say below, and they're trying to target, or let's say 1 to 3. Let's see what happened. In most cases, their stop loss get hit. You get it? You see, their stop loss get hit, and you can see that over here we had a sweep of this low right here. We had a sweep of this low right here, and after the sweep we are making a push to the upper side. So in the lower time frame we have a confirmation. Now that we have these confluences covered yet, now we have a sweep of this low and the market is trying to push to the upper side. Now this, after you see a sweep of this low, now you need to be confident in taking this trade because it always plays out. After a sweep, the market is reversing. You are not stopping this market from reversing. It must reverse. This market is no longer selling. So take note, be confident in your trade. Now this is the daily time frame. We cannot go to the 1 hour or the 4 hours because I'm doing a replay right here. So this works on the daily time frame. You can go and backtest this if this works for you. So comment in the comment section and tell me what you think, because if you are using the daily time frame to backtest, it works perfectly. You do not have to pay for TradingView, and this is an information I'm giving you for free. Now if this information serves you better, comment in the comment section and tell me what you think. Like and subscribe to this channel as well. So now, what I was saying, be confident in taking this trade. As we see a bullish structure close, now as this candle closes, you have to be confident. We might want to wait for confirmation for the lower time frame and another sweep of liquidity before the move. Now in most cases, if in the lower time frame that might occur, but this is daily, let's just use it as a reference and be confident in our trade. Let us enter the current price of the market, our stop below. Now when you're setting your stop, don't just put it at the wick. The market might come and still liquidate it before the movement occurs. So we want to be safe and use a proper stop loss. All right, so be safe, use a wider stop loss. And when you're targeting, let's look at the main structure of this market, and you can see this is a build-up of trend liquidity over time. This is a build-up of trend liquidity that the market is trying to build. So this is our supply zone that we are expecting to sell from. This is an imbalance. The market is trying to come and fade this imbalance right here. So this is our supply zone. We will use it as a target. I always recommend 1 to 3, but 1 to 3. But in these cases, let's target this imbalance and this supply over here. So in these cases, let's see how it plays out. And if this strategy is helpful to you, please comment, like, and subscribe to this channel. I will be dropping more liquidation strategy of how to execute this strategy perfectly. So please like, comment, and subscribe so we can reach out to more audience. Yeah, thank you. Let's see how it plays out. You can see if you put your stop right here, this market might have liquidated your order. If your stop was to be around here, this market might have liquidated your order. Now you can see, because we are playing it safe and we know what we are doing, we actually shift the stop loss to be wider and we are targeting for more. This is giving us 6 hour trade. Now this might take days and weeks to play because this is daily time frame. Don't forget, this market is fractal. It also works best in the 5 minutes, 1 hour, 15 minutes, and 1 minute. So let's see if we are going to reach our profit target. Now we break another structure to the upper side over here, and the market is breaking structure to the upper side. Wow, this is a massive push. As you can see, we are trying to fulfill our target, and we did fulfill our target. You can see we did fulfill our target. You see, this strategy is a golden strategy. Go and backtest this and tell me what you think. And this is an inverse. Also work at the sell side. So we have the demand zone right here, an imbalance. This is the liquidity you are looking to target. This was taken out already, and this was the main liquidity that the market wicked. After the wicked, those trading from this demand, this supply zone right here will be stopped out. So those taking a trade from this supply zone, they will be stopped out with a wicked, and then we enter our position, our stop to play safe, and then we ride it down to the demand zone. So this works as well as buy and as well as sell. So go and backtest this and tell me what you think. If this video is helpful, please like and subscribe to this channel. Thank you guys. Peace out. I'll see you in the next video.